Hi there, welcome to Kneppy Invest and welcome to another technical update video, January 12, 2025, an abbreviated version that we usually do because I won't be looking at individual companies' charts in this video, just dig into indices, commodities, crypto, and bonds. And the reason this video is abbreviated is because I already recorded a video earlier in the day. In fact, the time now is 4:30 p.m. I recorded that other video at about 8:30 a.m. And that video is your stock picks for 2025. I plan to release that video on a Monday morning at about 6 or 7 a.m., depending on your time zone. So look out for that video. If you're watching this video before then, if you're watching this video after then, it's already been released. So you can look for it right after you finish watching this particular video. Okay, so on to the technical update, looking at indices, commodities, etc., etc. We always start looking at the Australian indices, and this video is no different. Looking at the XJO, XSO, an okay week for the XJO, up about 0.5%. XSO was down 0.3%. Now, first thing I should mention is a pretty negative end to the week in America. So Wall Street didn't do us any favors for the start of the new trading week. I do expect a down day for the XJO and XSO, but overall an okay week, particularly for the XJO, up that 0.5%. And if you do have a look at the daily chart right now, it's sitting right on top of the 15-year trading range, or the top of the 15-year trading range. It's been oscillating up and down below and above that particular trading range, or the top of the trading range. So it just can't make up its mind. And right now it's right on top. So I do expect it to fall below it. And then I wouldn't be surprised over the next few weeks, next few months, it continues to oscillate up and down. Now, I do expect a little bit of weakness in the Australian markets over the next, 6 months. And the main reason behind that is I do think there is signs, or are signs, that the bank bubble is bursting a little bit, particularly among the weaker banks. We are starting to see those companies moving into downtrends, and I think eventually CBA, that share price of that company will start moving down as well. Now, it's not guaranteed, but I am seeing signs of that happening. And if that does happen, that should draw the Aussie markets down because there's such a big weighting in the XJO and the XAO and the XTO, or what's the XTL, which is the ASX 20. So I'm not that bullish when it comes to the XJO, just because of the massive weighting banks are in our indices. XSO is a little bit different. It's full of small cap companies. A down week, down 0.36%. And if you do have a look at this particular chart, by the way, if you just focus on the XJO, just a daily chart, there's no reason actually to be bearish. No reason to be ultra bullish either, but no reason to be bearish. Can't really say that for a lot of the other indices. I'm starting to get a little bit more bearish vibes. Now, the one concerning thing about the XSO, we saw a double top. So 2 peaks in this particular indice in October and November, and it hasn't gone past those 2 tops, those 2 peaks. And I really would like to see that to become a little bit more bullish when it comes to the XSO. Now, we did see the XSO drop a fair bit in December. So we didn't have any sort of Santa rally, and it fell below this little, I suppose, support level, and then it rallied. But this little rally we have seen the XSO over the past, we'll probably say 3 weeks, has sort of petered out, and that's not a good sign. What we want to see in this rally is for this particular indice to get above that double top, but it really hasn't happened. So I am seeing a little bit of bearishness in the XSO right now, just because this little rally is starting to turn around and is showing signs of going back down. Now, if the XSO falls below 3,040, that would, which is the last bottom we did see, that would be a bad sign. That would be a really bearish move for the XS. Maybe not really. I would say that would be a bearish, at least in the short term, move for the XS. So I'm okay with the XJO right now. Probably neither bearish nor bullish. If anything, just by looking at the chart, by the way, just by looking at the chart, not my overall feelings, because I'm a little bit more bearish than my technical side. But just based off the chart, I'm not really bearish when it comes to the XJO, but probably a little bit more bullish. But when it comes to the XSO, I'm seeing a little bit of weakness here, just a little bit. Now, I am seeing a lot of weakness when it comes to American indices. So let's start off with the NASDAQ. In fact, NASDAQ down 1.57% on Friday, Dow Jones 1.63%, Russell 2000 2.22%. And I am seeing some signs of a few of these indices in trouble, particularly Dow Jones and the Russell 2000. So let's start off with the NASDAQ. Now, we'll stay with the daily chart. Now, the daily chart with the NASDAQ, there is a bit of an uptrend, or there was an uptrend, and the bottom of that uptrend, or the start of that uptrend, was on the 5th of August, which was that yen carry trade. Remember, massive down period. Everyone was panicking. Well, maybe not panicking. Anyway, that was sort of the start of a short-term uptrend. And if you just link up all these lows, all these troughs, that continues up until really about the 20th of December or just after that. There was one day here on the 20th of December where it did fall below that trading range and then rallied fairly quickly. But then on the 30th of December, it fell below it. And then the next 2 days, it went a little bit lower. And we saw the NASDAQ try to get back above this trading range on Monday. So we're talking about the 6th of January. And that was the top for the week in the NASDAQ. And in fact, if you have a look at the weekly chart for the NASDAQ, a really bearish candlestick. So a solid red candlestick is bearish, which means the NASDAQ opened at the high and closed at the low or near the low. So a little bit of weakness in the NASDAQ. And you can definitely see that with the daily chart. So Monday, it was above that uptrend. And then a really bad down day on Tuesday, down 1.8%. On Wednesday, relatively flat. So we didn't see any bounce after the big down day. And then another down day on Friday after the public holiday on Thursday, celebrating Jimmy Carter. So a little bit more bearish when it comes to the NASDAQ. But if you do take a look at the daily chart, no signs that it's moving into a downtrend just yet. And even the weekly chart, there's no sign it's moving into a downtrend. Now, when we get to the Dow Jones, I'm starting to get a little bit of bearish vibes, but I'm not there just yet. And the reason I'm starting to get a little bit of bearish vibes is because we have seen the Dow Jones fall a fair bit over the past month. It's dropped from almost 45,000. In fact, it could have actually reached 45,000. Yeah, it was above 45,000, and now it's down to 41,938. Really bullish when it comes to this index up until we saw was it 9 or 10 down days in a row, culminating in a really big down day on the 18th of December when it was down 2.58%. A little bit of bounce after that, but I would say it was oversold. This index was oversold on that day, so that sort of bounce, probably understandable. But that bounce didn't last very long. It was a fairly weak bounce, and we've continued to see the NASDAQ drop lower. And on Friday, the NASDAQ actually did fall below the lows we saw after or around December 18th. So that is a negative sign. Now, if we see the NASDAQ fall below 41,600, that's the lows we saw back in November, late October, early November. That would be a really bullish or bearish move for the Dow Jones. So if we see that over the next week or so, that would lead me to being more bearish when it comes to the Dow Jones. Now, this could be just a bit of a correction, small correction, not that big. So it has gone down maybe 10%. 10%? No, not quite 10%. It's getting there. So this could be just one of those little corrections we see in the market from time to time. And maybe now is the time to get interested in the NASDAQ. In fact, whenever you've seen the NASDAQ get below the 100-day moving average, which is this blue line, that has been a good time to buy. And when I say that, I mean within the last year. We've seen it happen 3 times before, and that was the low. So whether it happens again remains to be seen. But this is a little bit different from what we saw during the year when it did go below that 100-day moving average. Anyway, let's move on to the Russell 2000. And I'm a little bit more bearish about this one too. Now, instead of one line as a resistance or support, this is a box, a purple box. And I put this in probably 3 or 4 months ago, and I was waiting for the Russell 2000 to get above this purple box because it was struggling for a long time, from or between July and November. Whenever the Russell 2000 got into this purple box, it fell away. So that was a resistance zone. And then it zoomed past that zone on the 6th of November. And I thought, this is it. This is the breakout. It tried to get above this resistance line at 2,440, but failed. And that failing occurred over 5 days. Yeah, about 5 days. Now, that resistance line goes all the way back to the highs, the recent highs we saw in November 2021. So that is a resistance area for the Russell 2000. And because it failed, no more strength in no more buying, lack of enthusiasm. The Russell 2000 fell away on that really big down day on December 18, when the Russell 2000 dropped 4.4%. Yes, 4.4%. It fell back into that box. Would have been a little bit oversold, but we didn't see any significant bounce. And the Russell 2000 just going up and down in that box for about 2 to 3 weeks. And then on Friday, it fell below that box on a negative day. Now, so this is looking a little bit more bearish for the Russell 2000. So I'd say the small caps in America are looking a little bit weak now. Now, if we do see some follow-up negative days in the next week, and we see the Russell 2000 drop even further, we could even see a crossover in the moving averages. And the last time we saw a crossover in the moving averages, signifying a little bit of strength, was back in December 2023. So the Russell 2000 has been an uptrend since then. By the way, the last time we saw moving average crossovers in the Dow Jones and the NASDAQ were both in November of 2023. So these indices have been uptrends for well over 1 year. Okay, so that's the American indices. I'm okay with the NASDAQ right now, but definitely Dow Jones and Russell 2000 are showing a little bit signs of weakness. Now, whether that continues remains to be seen, but I need probably more confirmation, but definitely looking weak. Okay, now on to international indices, starting off with the Nikkei. I'll be honest with you, Nikkei going sideways. I'm going to call it maybe a very slight uptrend. If we go back 1 year ago, almost 1 year ago, February, so 11 months ago, the Nikkei has done absolutely nothing apart from the massive drop during the yen carry trade fiasco, but it recovered fairly quickly. But if you just ignore that, the Nikkei has just been going sideways. So I think we can move on to another index. By the way, for the week, Nikkei down, I can't remember how much it was down 1.77%. Hang Seng, I think this could be turning a little bit negative as well. Now, we had that really good rally in the Hang Seng back in September. That was stimulus or promises of stimulus. I can't remember. And we didn't really see any follow through from that. In fact, on Friday, the Hang Seng fell to the recent lows we saw in November. So if it falls below those lows, that would be a sign that the Hang Seng is moving into a downtrend. Remember, the true definition of a downtrend is lower lows, lower highs. So if we see a new low develop, which is lower than the previous low, that's a lower low, which would be an indication that the Hang Seng is moving into a downtrend. Not only that, the most recent high was actually lower than the high previous to that. So that's a lower high, which again is a definition of a low trend. So looking a little bit more bearish for the Hang Seng, we need to see a bit of a rally, I think. There's also a possibility we could see the Hang Seng just range bounding, range trading, or trading range, whatever you want to call it. And the way I would play that, if it does happen, if you just put a line there, and if we do see it bounce, and then it goes up to the top of the range, and then go down, it's trading in a range. That's how it starts. But we need to see a little bit more proof of that happening, a little bit more time playing out. So if it falls further from here, that would be negative for the Hang Seng. Now onto the DAX, probably the most surprising one. I'm pretty sure the DAX was up for the week. I'm pretty sure it was up yes, it was, up 1.55%. So even though the German economy is one of the weakest economies in the world right now, and I'm being a little bit over dramatic saying that, it's not really transferring or translating to the stock market. Stock market, the DAX, keeps on rising. So again, whenever someone says the stock market and the economy are one and the same, they are not. They're different beasts. A lot of times you do see a bit of a correlation between the two, but in this case, it's not happening. The DAX is on a beautiful tear, one of the best charts you will see in any index in the world, yet the German economy is absolutely going crap. It's in the crapper. Now on to the FTSE. Now here's one index where if you love trading the range trading, trading the range or range trading, this is the indice for you. So I was talking about the Hang Seng, that was much shorter. This has been range trading or trade range, trading in a range for about, we'll say, for about 9 months. The bottom of the range is 8,000. Top of the range is about 8,400. And what maybe some traders are doing right now with the FTSE is whenever it gets to 8,000, buy, buy, buy. Whenever it gets to about 8,400 or even 8,350, sell, sell, sell. And in fact, the FTSE has reached the bottom of the range 3 times and the top of the range about 3 or 4 times as well. So just going sideways, and right now the FTSE is right in the middle of the range. So I can't be bullish or bearish because it's right in the middle. If it was near the bottom, I'd be, ooh, it could bounce. If it was near the top, I'd say, oh, I might go down from here. But nothing when it comes. I have no vibes, no feelings when it comes to the FTSE right now. Okay, so that's the indices, international, American, and Australian. Now on to commodities. We'll start with gold. In fact, I am bullish on a couple of commodities. Which 2 commodities are those? One of them is gold. And the reason I'm a little bit bullish on gold is simply because it possibly, just a possibility, it's breaking out of the symmetrical triangle, which is, well, the symmetrical triangle, I think I talked about this last week. So with a symmetrical triangle, the bottom of the triangle, you're seeing higher lows. The top of the triangle, you're seeing lower highs. So those 2 parts of the triangle are converging. And what we want to see is either the asset, in this case gold, get above the top of the trading range or the top of the triangle or below the bottom of the triangle, and that would indicate which way it's moving. And at this point in time, on Friday, well, no, maybe not this point in time on Friday, but on Friday, gold did move above the top of the triangle. So this is indicating the possibility of a breakout for gold. So I'm definitely a little bit more bullish when it comes to gold because of what happened on Friday. Maybe I prefer a bit of confirmation. So I'd like to see it stay above the top of the triangle. That would be a good sign for gold. So maybe in a few days, just to get confirmation that he's broken out, because sometimes you do see fake breakouts. You see something, or the commodity, the price, whatever you're tracking, move above a support level or resistance level, and then the next day pulls right back. So I just want to wait for gold just to see what happens over the next few days. Now, one of the things I could show you is some gold charts, just to see which companies I might be interested in. So let's do that right now, since I'm not showing you any other charts. So let's have a look at my gold watch list. 40 companies in this watch list. So quite a few gold explorers. I don't think it's completely full of gold. No, it wouldn't be completely full of gold explorers because a lot of these companies are producing. In fact, most of these companies are producing. So where shall we start? We'll start off with, I'm trying to find some charts I do like. So what about evolution? Yeah, it's not actually not a bad looking chart for evolution. Gold Road. Don't mind this chart. So this looks actually not bad. What I'm looking for here is the price of any of these companies pulling back, and we're starting to see it climb again. So Northern Star, yeah, you can say that here, has pulled back and it's starting to go up again, but not quite there with that one. Perseus, not there with that one. It's more going sideways, if anything. Remelius, it's actually fairly similar to Perseus, it looks like. It's almost identical, not quite. Regis, not bad. I sort of put this alongside maybe Evolution, Gold Road. Definitely not as bad as Resolute, though. That's, yeah, no interest in this one just yet. One I am interested in is SSR Mining. I do like this one. This is one I do like. This is the one whose share price has dropped a lot in February last year when something happened to the Turkish mine. And if you compare the share price now to the highs we saw before that, there is potential, or some good potential upside when it comes to SSR Mining. So this is definitely one on my watch list. Paying close attention to this one, and this is one I could buy. Westgold share price did drop because of the quarterly report. West African, I assume this one's just going sideways. Yep. Catalysts. Okay, this is sort of the thing I'm looking for. We have seen a pullback, and we're starting to see the share price starting to go up again. So I do like these sort of charts. So this would probably be my second favorite after SSR mining. So I've got SSR, catalysts. Now I'm probably am going to miss a few here because I'm going through this fairly quickly. Capricorn, do I like this one? I don't mind Capricorn either, and I could definitely see this one getting past the recent highs. So I don't mind that one either. Ora Banda. Since I like Catalyst, there's a chance I might like this one too. Yes, I do like this one as well. Some really good days, some really good strength in Ora Banda over the last few days. I do like this chart. I'd probably put this maybe alongside Catalyst, maybe just above Catalyst. I still like SSR mining a little bit more. Emerald Resources, no, that's actually gone negative. There's some other small cap producers here, like this one here, Kingston Resources, but that looks pretty negative. They recently did a capital raising, that's why the share price dropped. What else? Auric Mining, has this gone up? I had been trading this, I'm no longer trading it. I don't like this as much as some of those other ones. Newmont looks pretty negative right now, so no interest in that one. De Grey, is there a takeover bid for this one? I can't remember. Bellevue Gold, this one has dropped a lot. There could be value in this one. Maybe the market has overreacted. So I am keeping my eye on Bellevue Gold just because of valuation, with potential that the market has overreacted. And Pantoro, the last one we're going to look at. And I don't mind this one either. Not quite as high as Ora Banda, Catalyst, and SSR, but I don't mind Pantoro. Okay, so let's go back to gold. Yeah, gold, potentially breaking up. Actually, that's the wrong one. Let's go back to gold. Yeah, potentially breaking out for gold, but I would like to wait a few more days. But I definitely have a hit list when it comes to gold companies that I might want to trade. Now, I have mentioned before, I want to limit my gold companies, not my gold companies, mining companies. What I am looking at is the underlying commodity, and if I see a nice little technical signal, that's when I'm more likely to have more trades within that commodity. So that's why I'm paying close attention to gold right now, because the chart does look interesting. What about silver? Yeah, not quite as bullish as I am with gold. Yeah, not quite there as yet, but it's had a really good week. So silver up probably 4-5%, 4.15%. Gold, by the way, up last week by 1.95%. So definitely silver's had a much better week than gold, but I do prefer the gold chart right now just because it just looks a little bit better. And it's also breaking out of that symmetrical triangle. What about copper? Now, copper is interesting because I do have one copper position, no silver positions. I have a few gold positions, which I might add to. Interesting week for copper. Had a really good week, up 5 to 6%, if I remember correctly. 5.67%, a really good week for copper. I have one copper company, which is Hillgrove Resources, and this company did not bounce like copper. So there might be a delayed reaction right now. So it's going to be interesting to see how Hillgrove Resources share price moves in the next week. Is there a delayed reaction? Because you don't see the share price zooming higher for this company, which is now a copper producer. The chart looks pretty bad for Hillgrove, but this is one I am owning, have been holding for a while. So anyway, back to copper, a pretty good week. And if you do have a look at the daily chart, there is a little bit of resistance right here because the highs we saw in copper not that long ago in December. But you can see copper prices were higher than this for a fair bit during 2024. So a little bit of resistance moving forward for copper. Now on to iron ore. How am I thinking about iron ore? A pretty good end to the week. In fact, iron ore was up 1.75% on Friday, but overall the week I would assume was up a little bit, up just a little bit, up to 1.75%. So I suppose a good end to the week for iron ore led to an okay week overall. But if you just have a look at this chart, this is the daily chart, no positive vibes whatsoever for iron ore. And even you have to look at the weekly chart, yeah, nothing. It's been going sideways for a long time. Yeah, going sideways. The probably one negative thing you can think of here is if you look at the highs, look at the peaks here, And each successive, well, that's not true. I was going to say each peak is lower than the previous one, but this peak here in January of 2024 was slightly higher than the peak in February 2023. So my thinking has gone to the dogs right there. Anyway, and by the way, if it gets down to $80, I probably would take positions in some iron ore companies, just because that is a pretty strong support level for iron ore. It's been a strong support level for this commodity since 2019. Uranium, uranium, it had a nice rally last week, and it's gone to the dogs again. I think the second time I've said that. So a nice little rally, and if you do have a look at the daily chart, there's no reason to be excited by uranium right now. This is the spot physical uranium. No reason to be excited about uranium right now. So even though it had a couple of good days, it's just gone back down again. And that's why it's had a bad week, I'm assuming, yes. Down 6.27% for the week. And if you actually do have a look at the weekly chart, what I might do here is, I'll get rid of that line. What I might do is just zoom sort of in, or zoom, I don't know, what do you call that? It does look like there's a bit of a trend here. Definitely a bit of a trend there. That would be what I'm looking for, a break of that downtrend to the upside before I get interested in uranium. So that's interesting. Yeah, I just noticed that right there. You definitely draw a trend line with uranium, a downtrend for that particular commodity. Now onto the other commodity I am quite bullish about, and that is oil. I'm not sure if I'm ultra bullish about this one, so I probably do prefer gold, but I like oil. A couple of really good weeks for this commodity are 3.42% after being up 5.5% the previous week. And if you do have a look at the daily chart, this is starting to look really interesting. A little bit of weakness on the Friday because it did get up to $77 and it pulled back. And the reason that level is weak is because it went to $77 back in October and then it pulled back. So that's a natural resistance level for oil. And if it gets above $77, I'd become a little bit more bullish than I am right now. But I really like how it's moved over the past few weeks. So a bit of strength in oil. I'm not sure what's causing this strength. I probably should do a little bit of research into it, but there is some strength in oil right now. I would say just a short term at most right now. The reason I say that is if you have a look at the weekly chart for oil, nothing's happening here. Nothing's been happening for a long, long time. Okay, that's oil. Natural gas had a really good week. In fact, the weekly chart looks really good. The reason I say that is if you go, I put a line there, right there, as sort of a resistance area, and it's blown past that easily. So natural gas futures look pretty good. In fact, this chart looks really nice. If I saw some company on the ASX chart look like this, I'd say, yeah, it's pretty good. Although I'm just don't like this, how it can, these candlesticks, 1 hour candlesticks are pretty long. They all seem to be long. Lithium had a bad week, I'm pretty sure, down 6%. I'm just going to confirm that. Down 7.2%. Still keeping a close eye on lithium and lithium companies because this is exactly what I'm looking for. The bottom of the cycle. Is it the bottom right now? It may be, but I need confirmation and definitely time to think about which lithium companies you might want to own when lithium breaks out and starts moving up again. It could take a while though. It could take a few years. It could take 5 years. Coal down. Not sure what happened with coal. It just has collapsed over the last few weeks. This is Newcastle Coal Futures, down to $115 apparently. I did rally a little bit on Friday though. It was actually lower than that, $112. And if you have a look at the weekly, coal was down 7.26%. It also fell through a support level as well. Yeah, easily fell through that. I had a quick look at some coal companies. Yancoal not looking good. Yancoal, it's gone down a fair bit in the last week or so. In fact, if you have a look at the weekly chart, Yancoal's down 6.8%. New Hope down probably about, well, not down as much, only down 3.96%. And Whitehaven down, I would assume probably 2 or 3%. Let's have a look. Down 4.5%, so a little bit out there. Which chart do I like the best? Probably none of them. Yeah, that's all I'm going to say when it comes to coal. Tin, I have a feeling this had a good week. Yeah, tin had a pretty good week. Up 3.51%. Am I there being bullish on tin? No. Neither am I bullish when it comes to nickel. nor Palladium. Good end to the week for Palladium, up 1.6%, but yeah, not bullish when it comes to this one. And cocoa. So cocoa is showing a little bit of weakness right now. So we are seeing move down, and just like, which one was it? Uranium. Just like uranium, you could sort of imagine a bit of a downtrend line forming there. Just imagine that, and we hope, as connoisseurs of cocoa and chocolate, that the price of cocoa drops all the way down from 11,216 to zero. Yes, we want cocoa to be absolutely cost 0 cents, so chocolate prices hit the floor. Now, that would not be good for cocoa growers, and there's no incentive if that happens to become a cocoa grower. So, of course, that will never happen. But we could only dream about cocoa prices hitting $0. Okay, so that's commodities. Actually, before I move on, I mentioned I was a little bit more bullish when it comes to oil. What are some oil plays here? Because one company definitely on my radar is Beach Energy. I think I do like this chart. I really like this chart for Beach Energy, and this is definitely, if I put a little bit more money into oil, this will be one I play. Some of the other ones, not there yet. So Karoon, maybe value here. I would say Karoon Energy might be really good value at these levels. Chart's not showing me anything just yet, but I think it might be getting close. Santos, share price of this one has rallied hard, sort of like a V-shaped recovery, if I remember correctly. Yeah, rallied hard off $6.30. So it's already up about 10% from its lows. Really good volume on the days it hit its lows. Really good volume, which is a good sign. A lot of times when you do see a really good volume coming in, when the share price of something is dropping like this, and you see really big volume coming in, that could be a sign of capitulation and the bottom is being reached. And that is true for Santos. This could be a bit of a dead cat bounce, but with oil prices rallying, it sort of makes sense. And what's another one? Woodside. Do I have any interest in Woodside at these prices? No. Funny enough, share price of Woodside has been a downtrend for about 15, 16 months. And whenever the share price of Woodside gets above the 100-day moving average, it falters. We have seen it 1, 2, 3 times in the past. And it's got very close another 2 times. And right now it is above the top, just above that 100-day moving average. So this could mean the price of Woodside will start dropping. But if oil keeps on rallying, although I do know this is more of a natural gas play, so I suppose if natural gas keeps on running and oil keeps on running, then Woodside might be turning positive here. Might be turning positive. Now onto crypto. Bitcoin. What can I say? Bitcoin trading in a range. That range is between 92,500, 102,500. Whenever it gets above $100,000, we do see a little bit of weakness coming in, which makes sense. And then whenever the price of Bitcoin gets to 92,500, we see strength. We see buying coming in. We've seen that buying coming in 1, 2, 3, 4, 5, 5.5, 6, 6.5. We'll say 6. 6 times in the past 2 to 3 months. That is a sign of strength. Now, if it continues to test 92,500 and continues and continues and continues, I think that strength will weaken. I think eventually it will fall through. Exact same thing could be said if it goes back up to 102,000. Again, more times it gets to that level, and the more likely it's going to break above that level. So really interesting to see which way Bitcoin will go. Will it go to above 102,000 or will it fall below 92,000? At this point in time, it's just trading in a range, testing both of those levels time and time again. Maybe time and time again is being a little bit over dramatic. Ethereum, for this particular crypto, it's 4,000, the important level. Another important level for Ethereum is 3,100. We saw a really good bounce of Ethereum of 3,100 on the 20th of December. And we're getting very close right now. So if it falls below that, I'd be a little bit more bearish. If it gets above 4,000, really bullish for Ethereum. Now on to bonds. And there's not much to say about bonds. It got to 5%. The 30-year bonds the American bonds got to 5% on Friday. It did push back and finished at not 4.94%, 4.949%. The last time the bonds got to 5% was way back in October 2023. It didn't stay above 5% for too long. So really interesting, the 30-year bonds, or any bonds really right now. Now, there's not quite a correlation between the American bonds and Australian bonds. You would be able to see that if we look at Australian 10 years. There is, you could say it's definitely moving in the same direction, but you'll notice the 10-year Australian bonds haven't got past the previous highs in November. So that was 4.7%, and right now it's at 4.61%. But bonds are moving higher. The bond yields are moving higher. Now, I do know some people have bought the TLT ETF because I do think 5% is probably the peak or near the peak, and that makes sense. So don't forget, bond yields and bond prices are inverse related. So it means with bond yields maybe reaching the peak, the play here is to buy any sort of ETF, I think, that tracks the prices, like the TLT. Here it is, the TLT. You'll notice correlation. And the TLT right now is at $85.46. And that would be near the October 2023 lows, which mirrors the bond yield. So if you do think this is probably the limit, bond yields will get 5%, the TLT ETF is the play for you. I'm even thinking about it, by the way. I am definitely thinking about this one. And finally, currency, the Aussie dollar. How's it going? Not good. 62 cents was an important level for the Aussie dollar. I'm looking at this a little bit more closely because I'm planning to go over to the United States for a little bit of a hiking trip, not a multi-day hiking trip. It'll be day hikes. I'm going to be there for 2 months, and I want to do between 40 and 50 hikes. So there's all these hikes I want to do. Anyway, unfortunately, it's fallen below 62 cents on strength. An ugly looking chart for the Aussie dollar, and that was a support level, a really good support level, 62 cents. So continued weakness in the Australian dollar, unfortunately. Maybe I should sell some of my American holdings to get more money. Well, that could be a good play, because if you don't think the Aussie dollar will drop much from here, you sell your American assets, and if the Aussie dollar really rebounds a lot, then you buy back in and you make a little bit of money doing that, maybe. Unless the share prices of those assets go up significantly, then maybe you've lost money. Anyway, I would never do that. It's not something I would do. It's just too much uncertainty doing that. I'm just raising it out there. Anyway, that's all I've got for this particular video. No individual companies charts, although I did show you quite a few gold companies, oil companies, and what is the other one? Coal companies. If you have any questions, any thoughts, if you'd like me to look at any sort of individual company on the ASX, or maybe not, and the charts of any of those companies, just mention that company in the comments of this particular video, and I'll make sure I have a look at the chart for that company in my ASX Daily Rundown videos. Okay, that's all I've got for this video. Have a good day. Talk to you later. And don't forget, I am not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.